Hello everyone, welcome to another webinar with Streak. In today's session, we're going to be talking about support and resistance. So, a great trader once said that trading is nothing but buying at the support level and selling at the resistance level. Now, of course, this is an oversimplification of the profession that we indulge in, but at the same time, support and resistance is one of the first few topics that are taught to us when learning technical analysis. These levels are also utilized in many other technical indicators that traders use on a daily basis. But in spite of this, the majority of the community does not understand this concept very well. Therefore, to elaborate a little bit on it, to shed some light, and to show you how y'all can take complete advantage of support and resistance using Streak, we bring to you today's educational webinar. Now, before I start the webinar, I'd like to make an announcement that on popular demand by users, Streak has recently launched Create Plus. Using Create Plus, you can develop and deploy strategies, complex strategies that involve the usage of math functions. You can now also convert all your pre-existing scanners to a strategy at the click of just one button. This is the level of flexibility and functionality that Streak brings to you. I'll be showing you guys a small demonstration of Create Plus in this webinar, but a detailed video on the topic will be released in our upcoming webinars, right? So without any further ado, let's get a bird's eye view of the topics that we'll be covering today. What are support and resistance? Why should one study support and resistance? So these two topics are going to help you understand why support and resistance is important, how it can help us better our profitability, better our trades, right? And why we should even spend time studying this. Types of support and resistances. I'll be sharing with you guys some examples that involve support and resistance. We will learn how to identify, how to scan stocks that are trading near the support and resistance levels using Streak platform, which is going to be followed by creating and deploying strategies. Okay, creating and deploying strategies that involve support and resistances. Lastly, I'll be sharing some interesting facts, some bonus facts about support and resistance with you, which you may or may not know, right? So what are support and resistance levels? So these are price levels where the price is expected to bounce back into the opposite direction, or a prior prevailing uptrend or a prior prevailing downtrend is expected to slow down. On the left side, we have an example of support. We can see here that there was a prior prevailing downtrend here which slowed down at the support level. And since then, the price has bounced back into the opposite direction twice. So we can say that there is a high demand for the stock at this level. There are many buyers in the market and they are willing to enter aggressively, which in turn drives the price upwards. Now if the price were to come back down and test this level again, don't you think that there is a high probability that the price will bounce back into the upward direction again? So effectively, the support level acts as a cushion for the price, right? It does not let the price break down. Now, resistance levels work in pretty much the opposite way. They act as a ceiling for the price, right? There is a prior prevailing uptrend in this case, which slows down near the resistance level and the price is bounced back downwards twice. Similarly, if the price were to test the resistance level again, there's a higher chance of it bouncing back then continuing upwards. Now, this is because there is a high supply for the stock at that price, and a lot of sellers actually feel that it is a good entry point, to enter into a trade and then buy back the stock at a lower level. Also, many people that might have bought in somewhere around here, or people that are in buy positions, can take an exit over here, right? Why should you study support and resistance? Now, support and resistance are price levels where buying or selling pressure is expected to come in. These are the levels where big and significant moves can take place, right? And naturally, if you know where buying and selling pressure is expected to come in, you can better identify your entry and exit points, right? For example, if I was in a buy position and I see the price of my stock approaching a resistance level, then I'm going to be cautious. I will wait and I will exit the trade at the first sign of a reversal near a resistance level, right? They can help us identify levels from where prices can reverse or trends can pause. As explained earlier, The next point being that they can act as confirmation. I'd like to use an example to explain this to you. If an RSI bullish divergence was formed near a support level, I would say that it has a higher chance or a higher probability of driving the price upwards when compared to an RSI bullish divergence alone. This is because the support level acts as a confluence factor. It adds strength to an indication given by the bullish divergence. Similarly, if there was a crossover, if there was a MACD crossover near a support level, right, it would add strength to that indication. Types of support and resistances. There are static support and resistances and dynamic levels. Now, these static levels do not change with the formation of new candles. They will remain same at least for some time. Whereas dynamic support levels or dynamic resistance levels constantly keep changing. For example, moving averages, although they lag behind the price, but ultimately it moves in the direction of the price, right? So it keeps changing its values as new candles are formed. Whereas something like pivot points are straight lines. They are not going to change at least for the entire course of the day, right? Or similarly for 52-week high and low or previous day high and low, they're all going to remain the same. It's a constant value for at least a particular day. Quickly spotting support and resistance levels. Now, for this very purpose, we have a powerful and amazing tool integrated completely into the Streak platform. All you have to do is log on to streak.zerodha.com and you have to log in with your Zerodha credentials. It will lead you to this page. Now, this page, this first section, the funds section is a reflection of your kite account, right? So there is nothing different. There is no additional margin that is required to operate Streak. At the bottom of this page, we can see our technical section, which has a sole dedicated area for support and resistances. Now, this chart that you see here is based on the pivot points indicator. The basic premise of the pivot points indicator is that if the price is above it, then it is considered to be bullish, and if the price is below it, then it is considered to be bearish. Here we provide you with three support and three resistance levels for every stock that you have added to this section. You can add any number of scripts you please here, and the price points for the same will be displayed over here. The best part about this analysis is that it is available on multiple time frames. You can see 3, 5 and 15-minute time frame is preferred by intraday traders, whereas 30 minutes hourly and daily you can find swing traders or positional traders. So anybody and everybody can make use of this particular section right here. This also solves one of the major problems faced by traders, that is to open your charting softwares in the morning to go to every individual stock that you like to trade and then making a trading decision. Right here, within a minute, you can figure out where the price of your favorite stocks is relative to their support and resistance levels. So one major problem that this tool was solving for a lot of traders is that first thing in the morning, if you want to see where your favorite stocks are running, which direction is the price going in, then instead of opening a charting software and charting every stock individually for price analysis, you can simply come here and have all this information available to you at a glance. You can quickly see where the price is with respect to its pivot point level and then accordingly make your trading decisions, right? So moving on to examples of support and resistance. So pivot points, as explained earlier, is a static support and resistance, whereas moving averages are dynamic. So I'm going to chart this and I'm going to show you what pivot points look like. We have already plotted pivot points on the Nifty 50 chart. Here we can see that whenever the price crosses above or opens above the main pivot point, that is the black line you see in the middle here, it tends to have a bullish run, or it tends to stay above that line itself, right? So it acts as a good support level. We can see it acts as a good support level for the price. And once the price breaks down the pivot point, then it has a very bearish outlook towards it, right? Over here, the price broke down, right? And it kept going down. There is no looking back here. kept going down, opened even lower, and stayed lower the next day's pivot point level. So pivot points can act as superb intraday support and resistance levels for intraday traders. You can see it's taken support over here, resistance over here, support over here, resistance over here. Coming back to moving averages. So y'all must have heard of a lot of moving average strategies such as the golden cross or coming to moving averages. Moving averages, especially long-term moving averages, can also act as support and resistance levels. Here we can see that once the price crosses above the 200 period moving average, it has taken support over here. It is respecting the 200 period moving average, right? And once the price broke below, then it started acting as a resistance level, right? Scanning for stocks taking support on pivot levels. So now we are going to use Streak platform to scan for a stock that has taken support on its S1 pivot level on the 5-minute time frame. So I'm going to quickly create a scanner for you guys over here. We will use the 5-minute time frame. We will select Nifty 500 because we want to run the scan on the maximum number of stocks that we can do it on, right? So low, that is the low of the candle, should be lower than the pivot point S1. So coming back to this, here we can see that the price tried to break below the S1 level, right over here, but there was a pushback, there was buying pressure, which is why the price closed above the pivot point line and it turned out to be a green candle. Now this is what we consider a bullish signal, which is why we are trying to scan for it. The open price must be higher than the pivot point S1 and also because we want the scanner to scan for a green candle, we will have to put in a condition that close is higher than the open. Name it webinar support demo, right? Okay, scanning for stocks has got us one result, which is VTL NSC. So let's go ahead and input, let's chart it. And over here, we can see that the pivot point S1, that the price is near the pivot point S1 indeed. The low is lower than pivot point S1 and the price is, and the candle has turned out to be a green candle. So the scanner has successfully identified such stocks for us. Scanning for stocks taking support on pivot levels. So we are going to be creating a scanner that helps us identify stocks that are trading near their S1 pivot support level. So let's head right into Streak and I'll be showing you guys how to create this scanner. Okay, I'm going to be scanning on the entirety of Nifty 500. The time frame I will select as 5 minutes. Chart type, let it be candlestick since it is the most commonly used chart type, right? So what we're trying to do here is that we are trying to identify these kind of candlestick patterns using our scanner. So in this case, the price had breached below the S1 support level, but then certain buying pressure was influxed into the market, which drove the price upwards, right? So it landed up closing above the pivot point level, right? And it ended up being a green candle. So this is what we consider somewhat of a bullish indication. So this is what we want. This is the pattern we want our scanner to identify, right? For that, we will be inputting three conditions. I'll be explaining you all the conditions that I'll be inputting. So first, lower than pivot points, S1 level we'll be choosing. You can choose any level. You have 7 options here. You can choose any levels you please. The type is standard. We also have an option to set it as Fibonacci, but I will be using standard. Okay. Now in the second condition, we want the open price of the candle to be above the S1 support level. So what is an indication of a bullish move? Like one of the most primary indications, it is simply a green candle. So that is what our third condition is going to be. We are going to condition the scanner to only show us green candles that satisfy the above conditions. So the close is going to be higher, higher than the open price. We give a name to the scanner. So okay, so these are the results that we have received. So I will be cross-verifying these results with you. I'll be showing you how the scanning results are showing on charts, right? So let's start off with Havells. Okay, as you can see, this is the pivot S1 support level. The price is slightly higher above the low, although the latest candle that was formed, the complete candle, it has its low under the pivot point S1 level. So the scanner has successfully identified stocks that meet the specified criteria. Right? Let's look at another example here. Let's see Prestige. Okay, and once again, we see a large hammer formed over here, but nevertheless, it does very much satisfy the conditions that we had mentioned. And the low is below the S1 support level, right? So this is how the scanner can help us identify different opportunities that we can then take trades on, right? Okay. Now, scanning for stocks near lowest price in a period. So what this scanner does is it's going to identify stocks for us that are trading near their lowest price, their lowest point in the last 100 candles that were formed. For an example, in this diagram, you can see the last 100 candles that were formed, the lowest price in that is acting as a support level. Now, more often than not, in majority stocks, you will see that this lowest point acts as a promising support level, right? So let's again head back to Streak and create this scanner. Nifty 500, we'll be scanning this stocks. Time frame 5 minutes. Okay. Close high, sorry, lower than period min 100 because we want to compare the current price to the last 100 candles, the lowest price in the last 100 candles. Therefore, I will input low over here with an offset of -1 because we do not want to consider the current candle. We want to compare the current candle with the last 100 candles, right? Into number 1.1.005. So now you will understand very shortly why I have input this condition. I will explain to you very shortly. Now we want the close price to be higher than this lowest level. Period min. Okay, so what we have basically done using these two conditions is that we've defined a range that has a lower bound as the lowest point itself, and the upper bound is 0.5% plus that level. So for example, if this is your lowest point in a period, you will take 0.5% of this and add it. So now this is the range in which the scanner will look for stocks. This is the price range that the scanner will look for stocks in, right? So let's give it a name. Okay, there we go. We have quite a lot of results here. So let's scan or let's cross verify results for Apollo tires. Okay, so right here, the lowest point in the last 100 candles seems to be this. And our current price is trading above this particular level, but it is very much respecting the 0.5% boundary that we had added, right? So this is how the scanner has helped us identify a crucial support level or the price trading at a crucial support level, right? So after this, you can take your trades. You can identify these opportunities and you can go ahead and take your trades. Let's look at another result here. Let's go for Bank India, Bank of India. Here again, we can see that this is pretty much the lowest point in the last 100 candles, and our price is also trading within 0.5% of that, right? Okay, so moving ahead. So in the beginning, initially, I told you that I will be showing you a small demonstration of Create Plus. That is the new feature that has been launched by us. So at the click of just one single button right here, which says convert into strategy, I'm going to convert my scanner into a strategy, right? So this is the create strategies page where the conditions are already fulfilled. They're already input for us. We just have to fill in all the other criterias. So I have a basket of financial stocks that I will be choosing. Quantity we will keep as 100. Now you want to have a good risk to reward ratio. I personally like my reward to be double of my risk. So I will be putting stop loss as 2% and target profit as 4%. Right here in the show advanced section, you can also explore with different parameters that you might be using while backtesting. I will be inputting this as a CNC NRML order. This is the trade stop time and the trade start time and stop time, the trade start date and the trade stop date. This is your backtest period basically. This is the historical data that you are going to be backtesting your strategy on, right? So let's give a name to the strategy, support level strategy. Let's save and backtest. Right, so here we have the backtest results in front of us. This section, this backtest P&L shows us basically a return, the profitability of the strategy, how much profit or how much return the strategy has amassed over the backtest period, right? Then we have other important figures over here, which is the number of signals, wins, losses, winning streak, losing streak. Then we have max drawdown. In simple terms, max drawdown is a measure of your risk. So you should maintain a healthy max drawdown to profit ratio. Ideally, your max drawdown should be 3 to 4 times lesser than your profit or your return, right? You can check individual P&L charts of each stock. You can see all their transaction details. These are all the trades that were taken by the algo or the strategy when deployed in the backtest period. These are all the trades. You can verify all the trades from here itself. You can adjust the profit and loss for brokerage to get an even more accurate idea of the profitability of the strategy, right? Okay. So what we did is we created two scanners. We also converted a scanner into a strategy at the click of just one button because that is the level of flexibility that we aspire to bring to you guys. Since we already created a bullish strategy, we will now be going ahead and creating a bearish reversal strategy with pivot points. So according to this strategy, a sell position is initiated when a bullish breakout, when a candle breaks out above the main pivot point level, and immediately after that, the next candle breaks down below the pivot point level. Now, in this case, there are high chances of the price continuing going downwards because a lot of people are already stuck in buy positions. So let's go ahead and create the strategy on streak. Before that, to give you an idea of what we are actually trying to achieve, let me just show you a quick example, which is right here. So this is the kind of scenario that we are looking for. The candle broke out above the pivot point level, and immediately after that there was a breakdown, and you can see that the price has continued going downwards. Even over here, we had a huge bullish move after this breakout and breakdown strategy. After this breakout and breakdown occurred simultaneously, right? So let's go ahead and create this strategy here. Also, if anybody wants to make a strategy using Create Plus, you simply have to use this switch to advanced slider over here. The strategy that I'm going to be created does not require math functions, so we can continue using basic mode, right? I'm going to be adding some pharmaceutical stocks that I have selected, and the quantity is going to be 100. We choose the time frame as 5 minutes since this is an intraday strategy, right? It's going to be a sell strategy. So if you see, pharma stocks have been really bullish lately, right? They've had a bullish outlook on them, but we'll still make a sell strategy to show you an example how counter trend strategies can also be created and deployed. Okay, so let's go ahead and input our first condition. The previous close should have crossed above the pivot point PP level, that is the middle level, the main pivot level, right? And the current close crosses below pivot points PP level again. I'll be maintaining a 1 is to 2 risk to reward ratio again. So my stop loss is going to be 1%. My target profit is going to be 2%. Again, as I told you before, you can explore, you can edit any of the parameters, the advanced parameters that you want to edit according to your preferences, right? We're giving the strategy a name. Okay, let's go ahead and backtest the strategy now. So on the backtest page, if you wish to change any of your backtest parameters, you can do so by using this button here. You can change any parameters, your date, start time, stop time, your quantity, or if you want to verify and check or even change your conditions and run the backtest again, you can do so from this button over here. You just have to click here and you will get the option of editing your conditions. Okay, so we can see the backtest has run and it has given us these results here. So we can see that the period return for Oro Pharma has been 72%. That is, in the backtest periods, the stock has gone 72% up. Okay, and by using a counter trend strategy, we have still generated around 10% of returns, right? And if we adjust this for brokerage, still it is a 9% return using a counter trend strategy, correct? We've gotten good results also in Lupin and in Cipla. Okay. Okay, so now we have some bonus points to remember for support and resistance. Support and resistance can switch roles. So just for a minute, imagine that my cursor is the price. Now, as so long as the price is below this particular resistance level, it will remain a resistance level. And as so long as the price is above this level, it will remain a support level. But as soon as, say, the price is breaking out this particular resistance level and it takes a support over here, it comes back down, tests this level, okay, and then goes back up. This is the point where the resistance has converted itself into the support for the price, right? Similarly, if the price broke down below the support level and retested it, right, one or two times, then the support has been converted to a resistance level, right? The more points a support or resistance touches, the stronger it becomes, right? So for this, I have an example to show you. Over here, we can see two diagrams of a resistance level. Now, in this particular diagram, the resistance level has been tested successfully four times, four or more times. These are three and four exact touches, but we also have certain close touches over here. So approximately five times this resistance level has been tested. And the next time that the price approaches this resistance level, there is definitely a higher chance of reversal as compared to a resistance level that has been touched three times, right? Of course, three times, if a resistance level has been touched, it is considered as a valid resistance. But more times the level has been tested, the stronger it becomes. So prices move very quickly after clearing support and resistance level. So now what is the reason for that? While you are looking at a particular resistance or support level, there are also hundreds and thousands of other traders that are probably looking at the same resistance and support level, right? So if the price were to bounce back from here, then a lot of traders would have gone short right here, placing their stop loss, that is their stop loss buy orders somewhere around here. So when the price, after whatever movement it does, if it comes back up here, right, and the price somehow reaches over here, all the stop loss buy orders start getting hit, which in turn explosively drives the price upwards, right? Similarly, for support levels, if somebody has taken a long position after the price has bounced back from the support, they will place their stop loss sell orders somewhere over here, which is why when the price breaks the support level and reaches somewhat like close above this level, the stop loss orders are hit and the price explosively moves downwards, right? So these were some of the bonus points, some of the important points that I would like to share with you all about support and resistance. Moving on, so thank you so much for staying tuned right till the end of this webinar. If you have any suggestions regarding this webinar or Streak platform itself, please feel free to write to us at support@street.tech. Also, you can follow us on our Twitter handle for latest updates on news and for all our upcoming announcements. You can follow us on Twitter. Also, like I mentioned before, we have recently launched Create Plus, and our upcoming video is going to be a detailed demonstration of the same. So if you would like to watch that, please subscribe to our YouTube page where we have a rich collection of streak related content just for you guys. Okay, thank you.